All right, good evening, everyone. So thanks for taking the time off to join us this webinar. Hope you're as excited about this product as I am. So before we begin, I think I'd just like to ask everyone here to just think about how comfortable you guys are in terms of managing your own investments, and then whether the returns that you're getting uh, are they are they to your satisfaction? Because right now we're living in an era whereby market uncertainties are becoming even more common. If you look at the chart on the left, just in the past several years, we've seen the US-China trade war, global COVID-19 pandemic, and Liberation Day tariffs. So all things have completely changed the landscape of global trade. And even to this day, I think just last month, there are even more tariffs being imposed on seemingly every country in the world. And on geopolitical front, before this, we had an era that was a lot more peaceful. But if you look at the world recently, the past few years, we've had the Russian-Ukraine war, Gaza, and in the Middle East, seemingly there's a war going on and a ceasefire, and it doesn't seem like any end in sight. But even through these uncertainties, right, a lot of uh, a lot of clients come to us and they tell us that they still want growth for their investments, but they don't want to sacrifice on stability. And usually these two things are kind of they don't come hand in hand. But increasingly more clients are also coming to us. Then they tell us that they also want income. And so with this in mind, we were thinking very hard on designing a product that can fit these three features. So income is whereby investment can pay you every single month, and stability for when the market turns against you, your portfolio does not suffer a very huge drawdown. And then on growth, for when the market moves higher, you don't want your portfolio to also miss out on the upside. And that's where we come up with the global income portfolio. So this portfolio will pay you dividends every single month. The investments are globally diversified across bonds, equities, across multiple countries. And the income sources do not just come from a single source. So we have incomes coming from bond coupons, equity dividends, option income strategies, so to ensure that no single market will drive the income that you are receiving. And lastly, this one is built for stability. We have picked the best income strategy funds out there, and we are consistently monitoring it to ensure that your income stays protected. So we've done a back test using 5 years of data from 2021 to 2025. And what we found is that this portfolio gave a return of 41% over that 5 year period. So that adds up to an annualized return of 7.1%. And if you refer to the bar chart on the right, you can see that most of the returns came from income. And that is exactly by design. So this is a global income portfolio. So this is designed to give you the returns in the form of income. But you also are able to participate in some of the market upside, which is why you can see that there's also an element of capital gains on top of the income that you're receiving. This is a chart showing the monthly distributions based on 100,000 that was invested at the start of 2021. So this is monthly distributions for 2025. So this will help you to visualize how consistent your distributions can potentially be. So for 2025, it paid out a dividend every single month, and the yield averaged out to about 5.1%. And even if you did the back test from 2021 up to 2025, the portfolio paid out 60 out of the possible 16 months, so not a single miss. And we've also built this portfolio with resiliency in mind. So I'd like to draw your attention back to 2022. So if you recall, 2022, we had some of the worst market drawdowns in recent years, where we saw inflation rates hitting 40-year highs. Global central banks were all tightening, and we saw equity markets falling by 20 to 30%. Even your bond markets fell by double digits. And for this benchmark, it fell from the peak to the bottom, a maximum drawdown of 20.5%. Whereas if you had invested in the global income portfolio, we found that the drawdown was only 6.6%. And on top of that, the time that it took to recover from the bottom back to its previous high, that took 9 months. Whereas for the benchmark, the time it took to recover from the absolute bottom back to its previous high, that was 16 months. So if you imagine that it took almost double the time to recover back to the previous high, and that is a period where your portfolio could be sitting in losses for more than a year. So I just like you to think whether you are emotionally able to accept that sitting in losses for more than a year. And this table shows you the consistent performances over the previous years. So even if you look at 2022, whereby global markets declined by double digits, the portfolio had a total return of just down by 3%. And it also paid out a distribution of 5%. And if you look at the returns every year, you can see that it's quite consistent. And alongside that, the distribution yield on average is paying close to 5% every year. And so some of you may be just wondering uh, how we managed to do this balancing income, stability, and also growth. So firstly, it starts with strategic asset allocation. So this portfolio is diversified into global equities and bonds. So we have 60% allocation into fixed income and 40% into equities. But it's balanced, but this allocation is not static. So as we see fit, we can also adjust the allocation 15% in either direction, depending on the market conditions. So to ensure that your income, monthly income that you get, stays protected. And we've also funds. I mean, the portfolio also has some of the best income strategy funds out there. So we're not just limited by the funds that we have here in Malaysia. So through our platform in Singapore, we also get access to some global funds that are not available here. So this is truly uh, a portfolio that has some of the best global income strategies out there. And if you look at some of the names here, I'm pretty sure some of you would recognize this. These are some of the leading fund houses that we have in the world. So who is this for? So when we designed this portfolio, we believe this portfolio was built for simply anyone who wants consistent monthly income. So for the retirees, if you want something that's predictable without having to monitor the markets, And then for professionals or business owners, you can actually build a passive income stream while you focus on building your career or your business. And then for even for the younger investors, can use this as a starting point to generate that consistent income that can supplement some of your monthly expenses, and at the same time also growing your wealth. So yes, the global income portfolio is actually live already. We launched it on the 31st of July. So to start, it's only a minimum of 1,000 ringgit, and there is no lock-in period, so you can redeem your investments anytime. And it's a 0.5% one-off subscription fee. And in terms of the portfolio management fee every quarter is 0.125%. And right now, we actually have a launch promo. So that is 0% fee, 0% subscription fee until 28th of August. So just about 2 more weeks. Okay, that's the end of my presentation. I'll be happy to take any questions. All right, let me just go through the chat. Yeah, so there's one question on so if the market's a downtrend, we're still getting the same payout every month. How about crisis? So I think if you can refer back to even in 2022, let me just go back. Yeah. See, even in 2022, uh, that is somewhat of a recent crisis that we have. We've never seen inflation rates this high. Like I mentioned, it was 40-year highs. Central banks were tightening. You never see this sort of tightening cycle in recent history. So even then, the portfolio still managed to pay out uh, dividends of about 5% a month. So if a situation like that were to happen, uh, we can see that in history that the portfolio is still able to pay out the dividends. But even if we think that a crisis is about to happen, we can also reallocate the portfolio to more towards fixed income, because our priority here is to ensure that your income stays protected. See, the portfolio is, I think a second question here is the portfolio adjustments will be performed on a fixed cycle period. So there's no fixed cycle at this point. We will perform any adjustments at our own discretion as we see how the market evolves. And so I also receive some frequently asked questions with regards to redemption period. So for this portfolio, the redemption period is as long as the longest redemption period of the underlying fund. So for what I checked is that the longest redemption period here will be T plus 7 business days. So you can expect to get your money back about after T plus 7 business days. And I think other questions that I frequently get as well is whether this portfolio is Sharia compliant, and whether there are any plans for Sharia compliance in the future. So at the moment, this is not a Sharia compliant portfolio. and whether we have plans in the future. At this juncture, I would say that we are not planning to launch any Shara compliant global income portfolio in the near future. Let me look at the questions. Okay, what question? Will it pay out of capital to maintain the 5% target? So how we get the how did we pay out the income is dependent on the underlying funds. So what we pay out is only the dividends that we get from the underlying funds. So we do not sell any of the underlying funds in order to meet our payout targets. It solely depends on how much that the underlying funds pay us, and then we will distribute it to the investors of this portfolio. RHB Asia Equity High Income. Uh, Not sure what they're comparing to, because I didn't mention any RHB monthly pay fund.
Julian, there is a questions in the Q&A tab, so probably you can have a
Oh,
look on that as well. Yeah.
okay, hold on. All right. Oh, sorry. Oh, okay. So subscription fees is paid on every investment. Yes, that is paid on every investment. So the fees, is right now there's a promotion where it's subscription fees of 0%. But the normal rates is 0.5% on every investment. And so what is the guaranteed percent payout every month? So as with any investment, we cannot guarantee payout. What we can do is we will find funds with the best income strategies to ensure that your payout stays consistent. And if the market turns against uh, remittance more bearish, we can actually adjust the portfolio allocation to ensure that the payout stays protected. So distribution comes from a combination of funds. Yes. So there are 9 funds in this portfolio. Um, there are 7 funds pay out monthly dividends, whereas 2 funds will pay out quarterly. And so you will see that generally every uh, the following months after every quarter end. So mainly your April, July, October, January. So generally those months you will see a slightly higher payout. But since most of the funds are paying out on a monthly basis, generally the payouts are fairly consistent month after month. So someone asked, what do you mean by 15% tactical in your fund allocation? So currently we have a 60% allocation to fixed income, and then 40% into equities. So by 15% tactical, meaning for, let's say, for fixed income, 60%, we can go up to plus minus 15%, depending on the underlying market conditions. So that just allow us to ensure that the portfolio income stays protected. So in the event where we think market conditions are getting bearish, we would seek to move more into fixed income. Whereas if we think markets are more bullish, we can also adjust the portfolio allocation to include more allocation towards equities. And can we reinvest the dividends automatically? At this point, no, because the design of this portfolio is to pay out consistently every month. If you would like to have an investment portfolio that reinvests automatically, we do have managed portfolios that are automatically reinvested. Okay, so someone asked is why should we go for this when we can also buy bonds or some income funds or unit trust directly, which can also give above 5%. So I think the main issues with most people is that they don't have time to monitor the markets. They are busy with their jobs, with raising a family, taking care of parents. So this is an option where you can just leave your money in, and you can rest assured that there is a professional that are managing this pool of funds for you. Versus if you buy, let's say, a single bond, you are exposed to whoever the company that is issuing those bonds. You may not know whether the financials are actually healthy. So by going directly into bonds itself, you could be exposed to a single issuer risk. And the same goes for if you just choose income funds or unit trusts directly. You are exposed to just the single fund managers, and you have to be the one to monitor the markets and their performance consistently. Whereas I think with this portfolio, there is a team that will look at this on a very consistent basis. Okay, some similar questions. So, are there any other fees other than fees I shared earlier? So, the underlying funds have their own uh, fees. So, if you can check the funds fact sheets, generally you will see a expense ratio. So that is the a normal fees that every fund charges just to operate the fund. So, so do elaborate on how the portfolio management fee is calculated. Uh, I think to give a numerical example is a bit difficult, but I'll give how this is calculated. So basically, you have a NAV that is computed on a daily basis, and the portfolio management fee will be counted on based on the daily NAV of the portfolio, and then it will be charged to you every quarter. And so compare this with yes, Franklin Income Fund. So yes, we have actually looked at the Franklin Income Fund. Uh, uh, the long record of inception is notable. but they did change their strategy relatively recently. It's not the same. It was not the same strategy since inception. So don't compare it all the way back to inception with how the fund is performing. And if we look at the recent returns for this fund, although they can, I think if they can pay out a very high dividend yields, but I would like to focus on the total return basis as well as the fund's volatility, which is where when we compare, uh, that is where the global income portfolio stands out lah. So despite having total returns that are are about in line with the Franklin Income Fund, the volatility is a lot lower than the competitors fund. Maybe with other questions. Where where is the dividend source coming from? So it's a combination of uh, bond coupons, dividends, and also offshore income strategies. And all the distributions that we pay out comes from the underlying funds. So whatever the underlying funds pay out to us, that is what we will distribute to the investors of this portfolio. And total returns, so total returns includes unrealized capital gains and also purely from and also from the income that we receive from the underlying funds. And does this portfolio use covered core strategies to earn? So yes, we do have two funds that use covered core strategies to earn, but we do not want to make this as a core focus of the fund, as using covered core also has some drawbacks, especially in terms of capping the upside. The indicative payout of 5.1%. So the numbers that we shown here are before our fees. So yeah, we haven't net off the maintenance or management fees. So NAV, and will there be capital appreciation? Yes, there will be capital appreciation. Uh, So if the market declines, will the portfolio still continue to pay monthly income? Yes. So when we did our back test of the past 5 years from 2021 to 2025, we found that the portfolio paid out 60 out of the possible 60 months. So yes, even during the prolonged market crash in 2022, the portfolio still paid out every single month. And T+7 redemption is on the portfolio. So after redemption, it will go to your cash account. Total return, yes, the total return includes the distribution yield. So it's a combination of your capital gains plus the distribution yield. So on the equity portion, is there a specific industry, the fund No, so we do not limit ourselves to only investing in specific industries. So what we try to do here is to find the funds with the best income strategies out there. So they focus is on income generation and not purely on investing for specific industry thematics. Okay, so yeah, I think this is a good question. Yeah. So why don't invest directly into the underlying funds? Even investing here costs you more in terms of fees. So yes, some of these underlying funds, I think as I mentioned, uh, quite a number of these funds are not available here in Malaysia, and we get it through access to through our platform in Singapore. And secondly is that uh, the whole idea of investing in a portfolio is that if you to save you time on monitoring the markets, given that there is just so much uncertainties going on in our markets, uh, you may not have the enough time or energy to dedicate towards monitoring the markets on a daily basis. So this portfolio is an area where you can just park your money, and then you don't have to think too much about monitoring the markets. So it's more of a hands-off approach to investing. Right. Here, so the dividend yield is capped at 5%, even when the fund performance is good. Uh, so uh, so why is roughly around 5%? I think the message we want to send here is that the dividends here are consistent. You don't want to pay out everything from your capital gains. So some of you may think that it's a missed opportunity, but if you get erratic payouts, uh, really it's difficult for investor to make decisions on what they plan to do with the income that they receive. So given that if you are able to deliver something that is more consistent, you're able to plan your finances better and also make more informed investment decisions. And so any exposure to US AI stock? Yes, so we do invest in global funds. There I can show the allocation again. Yeah, so you can see that there is 30.6% allocation to global equities, and definitely some of the big AI names will be included in this global equity allocation. Mhm. Is there a risk of losing the principal? As with any investment, there will be a risk of losing your principal. But rest assured that we have selected again some of the best income strategy funds out there. So at least you can be assured that the the fund managers that are managing these funds are also prioritizing stability as well as giving you that consistent monthly income. Yeah, they'll take this one. So there are many products available in the market that offers more than 5% returns. So I think you have to dig a little deeper into what they mean by, let's say, I'm paying out 8%. So what a lot of what a lot of funds out there we see is that although they are able to pay out 8%, the total returns actually are not covering this 8%. So what it means is that the underlying returns actually do not cover the payout that they are actually making. So what we're trying to achieve here is that the total returns that we actually achieve are able to make these payouts so that you're not just paying out of your own capital to show a high payout number. What we're trying to achieve here is something that is consistent and is able to be replicated year after year. So if I invest 100K, 5%. So I think you want to emphasize again that 5% is not your profit. So the 5% is your payout. So on the 5-year average, let's say it was about 7.1%. So 7.1% is actually your total return. 5% is what we pay out to you on a monthly basis. So yes, you will get that in your cash account every month. But you also have some form of capital returns in the portfolio as well. So say bonds can provide consistent distribution also around 5%, or even buying the equities outright. So what's the strength of this portfolio? So I think I've also highlighted that if you buy bonds, you are exposed to that single issuer. So in order to make a decision to invest in the bond, you got to do your homework in checking their financial stability, whether they'll be able to meet their monthly cash flows. Or the same goes for if you're investing in outright equities, you got to be monitoring the markets to see whether they are able to provide that growth in order to consistently pay out that 5% returns. So with this portfolio, again, you're giving you're investing in some of the best income strategy funds out there, so you don't have to constantly monitor the portfolio. You don't have to monitor your investments. You can just leave it to us to manage the portfolio as well as the funds that has the best income strategies. So mention payout at the first of every month. So yes, this portfolio is will pay out on the first of every month. So we'll pay out to your cash account, and so we'll pay out. So if you opt in for auto sweep, then it will go into your auto sweep account after entering the cash account. So the what Allianz Global High Payout Fund, yeah. So this fund is one of the funds in our portfolio, and at the moment this is not available here in Malaysia. So we get it through the our platform in Singapore. Yeah, I think this also if I invest less than a month before dividend payout, without still be entitled to receive the dividend. So how it works is that every fund has a dividend entitlement or ex date. So if you have invested before the underlying fund's dividend ex date, then you will be entitled to receive the dividends. So it depends on when within that month that you invested. So the volatility that we calculated is around five, if I'm not mistaken, about 5 to 5.5% per annum. So that is quite a fair bit lower than some of the other balanced income funds out there. So for example, year 24, total return is 7.6 minus 4.9, 2.7 is capital gain. It's not exactly correct, but you can use that as a ballpark figure. So it will end up around that number, but mathematically it's not exactly just minus like that. Okay, someone asked, so why year 2022 the return is -3, we still get 5% distribution yield. So the whole idea of why we don't distribute like the other funds, even if they make say a capital gain of say 10%, they don't distribute the entire 10%. That we're trying to make sure that the income stays consistent. So if you look at 2021, there was a higher, I think there was about close to 10% return, but they only distribute about close to 5%. And so this is enough to offset the subsequent years' losses, so that they ensure that the as much as possible the distribution is not paid out of your own capital. Yes, Aham Series Global Equity High Income Fund. We do have the BlackRock fund in this portfolio as well. So yes, we do know about this fund. So the question on dividend exit. So if you invest the day before the exit, yes. So for that underlying fund, if you invest before the exit, then you will get the dividends from that specific fund. And so how this different from the fully managed portfolio? So the core managed portfolios that we have on FSM one, those are more growth oriented. So the strategies there are focused on finding the best growth ideas out there, and it'll be sorted based on the different risk profiles, and the dividends there are all reinvested. Whereas here, for the global income portfolio, what we're trying to achieve is consistent monthly payout. So it's for investors who wants to get consistent monthly income without having to monitor the markets. So that fits that purpose. The answer from YouTube. What's the latest 5 years? So the 5 years at latest one up to July, I don't have the numbers in me. But I can tell you for just for year to date returns for this portfolio is up 7.1% as of the end of July. And the payouts are still fairly consistent. It should average out to close to 5% when it reaches the end of the year. So your percent monthly payout from investment is average around close to 5%. So every month on average should range between 0.4 to around 0.6% every month. So what happens to the capital gains from this fund? So capital gains will be, I think, like with any investment product, it will stay with you in the investment portfolio. So if you wish to redeem, as in to cash out some of these capital gains, you can redeem anytime, as there's no lock-in period for this portfolio. So when is the monthly dividend exit? So for this particular portfolio, it's quite unique. So the dividend exits depend on the underlying funds that we have. So currently we have 9 funds in this portfolio. So there will be a separate dividend exits for the underlying funds. So if you invest in this portfolio in the first month, the income that you get in the following month could be a bit lower than expected, but rest assured when we keep holding it for the subsequent months, you will see that the dividends will be fairly consistent on a month-to-month basis. Uh, so will the so will the portfolio management fee deducted from the portfolio itself? So yes, it's calculated on a daily basis based on your daily NAV, and then the portfolio management fee will be charged on a quarterly basis. So for some returns, it will pay out monthly into cash, some not. So in your FSM1 account, we will show the total payout that has been made from this fund. So you'll be able to see historically how much this fund has paid out, and your capital gains as well. You'll be able to see it in your FSM1 account, similar with how you see for any other investment products that we have. So is there a longer term track record for 10 years? Sorry to say, at the moment, we did not track for over 10 years. Uh, so yeah, we don't have that track record at this point in time. But this rest assured that again, these are some of the best fund managers out there. So the the fund houses themselves have very consistent track record in managing these sort of income strategies, and that is a reason why we have also picked them to be part of this global income portfolio. So quarterly management fee is charged every quarter. Will it be a set off against the payout? So no, the payout would be just based on the what the underlying funds will be paying out, and then the management fee, quarterly management fees will be charged separately. So it's not just offsetting against the payout amount. So portfolio management fee, yes, is 0.125% per quarter. And the 5% payout, yes, that is based on the NAV. And just emphasize that the 5% is not guaranteed, it's just an average based on the vectors that we've done for the past 5 years. Okay, maybe I'll just take final one or two questions before I end this webinar. Okay, so I see there's no further questions. So thank you everyone for joining this webinar. I hope you find this presentation insightful. If you have any further questions, feel free to reach out to the FSM1 team, and they'll be happy to help you with any questions that you have. So thank you again, and have a good rest of the night.